Hey guys, this is the market update and we have CPI this month, which is going to show us what inflation was for June. This is such an important figure for Bitcoin and the rest of the market. So we're going to have a look at that throughout this video, when it actually is and how it's going to affect things depending on what the number is compared to what the consensus is. Obviously, this is going to affect the price of everything in the market, including Bitcoin and crypto. Right now, as we're waiting for this, we are going to be in a holding pattern. So nothing's going to happen this week too much, but here it is on Wednesday at 8:30 a.m. That's US Eastern time. We're going to get the CPI figure. Now, CPI is expected to be 8.8%, which is obviously insane. But people aren't expecting this to come down as of last month, June. Oil remained very high. So what we're expecting is 8.8%. Now, if the figure comes in way below that, obviously, that's pretty good news overall for the economy and probably for risk assets as well. If inflation becomes crazy outside, 8.9%, 9%, maybe, 9.1%, something like that, then I would suspect another sell-off in the markets, because that's telling the Fed that inflation isn't under control and they have to be more hawkish. But a lot of this is priced in already. What I also want to come to is the Bitcoin price. I'm actually seeing a technical pattern play out here, which I just want to highlight, which we'll go through. So this is known as an Adam and Eve pattern. It's actually playing out really perfectly right now. So I'm just going to draw this on the chart. You obviously have a resistance line up here, and this is actually meeting the 200 period moving average, which is quite interesting as well. So what usually happens with an Adam and Eve pattern is you get this big sell-off, which we've had here, right? So this was kind of the 3AC sell-off, and then you have a recovery into a resistance, which we got here. Then you have what's called a kind of sell-off and recovery again, which is like this U shape here, back into the resistance. We actually broke this resistance and then came off again and kind of tested this. So it's not a perfect pattern, but this is how the Adam and Eve pattern actually plays out, where you have a big sell-off. You obviously have a pattern right here, which is the support level, going into the resistance, coming back to support, up to resistance, kind of trying to break out, retesting. And this is typically known as a bullish pattern, which is obviously good if you're a Bitcoin holder. You're seeing it here. It's not perfect, right? So the sell-off didn't come back to this level, the support level, but this isn't, basically a real world Adam and Eve pattern. And then obviously this pattern is looking for a bullish move to the upside. In terms of day trading, if you are a short-term trader playing this out, you're looking at this this kind of cup pattern right here for the break on the upside, which would take us to about, let's say, 21,800, maybe 22,000, something like that, which would be a 10% move. Now, this is obviously not going to play out until the figures come out on Wednesday. So, it really just depends on the figures, right? So if CPI is a little bit lower than expected, then I would suggest that the market's going to take that pretty well, because they're going to think that the Fed has kind of started this reduction in inflation. But if it comes in hot, or kind of level 8.8%, maybe hotter than that, I would expect the markets to sell off from that, because again, they're just thinking that the Fed hasn't even started to affect inflation yet. And so that just means that the market in general, and all of the, the trading algorithms that trade these figures, because people aren't trading these, right? It's all algorithms that are set in place that if the figure comes in at 8.9, and then some of the breakdowns of each individual sector with the inflation there, that's going to trigger, bots to do most things, but they're going to be set, if inflation is very high, basically to sell off, expecting, rates to be higher for longer and everything like that. So this pattern is playing out right here. That is the potential to the upside. But I think if we get bad figures, then you're going to be looking at, another breakdown and maybe testing some sort of, support level, maybe down here, 20 on under, or even down to this support level, which you broke to kind of, maybe in the 19,000s. I'll leave the link to Bybit in the description, the platform you see me using. If you are a new customer, they'll give you a deposit bonus up to $4,000. So if you put some crypto or fiat on the account, they'll give you that deposit bonus. I'll leave that link in the description. I also want to highlight these two posts from Raoul Pal, which kind of square with my way of thinking as well, which is how much tightening we've seen in the market already versus what's actually going to happen. So everybody knows that a recession is happening. Now we're just waiting for those figures to come out to see, well, how bad is the slowdown? Or is it not as bad as figured, by risk assets coming off your 50, 70%, which we've seen in Bitcoin. So what you can see right here is how much, which sector of the market has priced in the most declines in the market. And that has been the NASDAQ. Now, this is typical because NASDAQ is higher beta. And so during swings up and down, it reacts usually more than, other assets that are lower beta, and, they're not going to move as much. The NASDAQ has already priced in a decently sized recession, as you can see here, almost as much. You can see the pricing in of the NASDAQ right here is almost as much as the pandemic tightening, right? Which everyone thought the world was going to end. So we're basically in that again, right? But we don't have that this time. And so is it overdone? Well, that's obviously up for an opinion and actually what the real data says. But you can see the NASDAQ has tightened more than any other sector, and Bitcoin and crypto definitely trades along with that. So Raul's thoughts here is that essentially these high risk assets, or assets that are out on the risk curve a little bit, he thinks they might outperform. He says, I started to accumulate into this weakness because it's most reflective of the future economic reality and thus should outperform as yields come lower. So this is based on the fact that, we're thinking that interest rates have kind of peaked up here and they can go sideways, but they're not going to go up much more, because what we're seeing in the real data is that the economy has tightened, and now we're just waiting for that to come out in the economic data. And so there might be some discrepancies here, but for the most part, that tightening may have occurred. And so the one sector that is going to come out first and hardest would be the NASDAQ in that respect. And that just is technically what happens to higher beta names, which is what the NASDAQ and Bitcoin is. So I'm still kind of, you have to be more bearish, or at least not as bullish, because NASDAQ can still come down, S&P can come down because of all these earnings revisions coming down. But when that flips, when the Fed eventually says, yes, the economic data is showing a huge slowdown, inflation is low, we don't have to tighten as much, and we can pause or stop or just see how we go, then you're going to see a big bid under the market. When that comes, if it's earlier, or whether we get another move down as S&P earnings revisions come in and we test lows again, that could very easily happen. But after that, after recession is here and hit, the Fed is going to flip. And the first sector out of this, same every single time, would be those high beta names, Bitcoin, NASDAQ, and the names that have just come off so much already. It depends on your time horizon. If you're looking 12, 18 months out or 2 years out, then you're looking at risk asset prices like Bitcoin and NASDAQ stocks and saying they have already priced in the majority of this recession. And also, as recession isn't the de facto, way of the market, the de facto way of the market usually is to just rise along with economic growth, right? And the debasement of currency. So if you've got that time horizon, then obviously this recession is mostly priced in for the most part. If you've got a short-term time horizon, then obviously you're still looking at downward pressure here because of earnings revisions, the stock market, most probably coming off more as economic data feeds through and they start revising their earnings and earnings forecast down a bit. So depending on your time horizon, that's kind of how I would trade the market. If you want to check out Bybit, I'll leave the link in the description. You can get a deposit bonus up to 4,000 in your futures trading account. Check that link down there. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.